Hello and welcome back to Tamebay Live. This session with Ulsam is going to be really interesting because we're going to be looking at how you value an FBA business and the metrics that show the underlying health of your business and how to measure them. But before we get started, I just want to remind you that the networking areas on the Totem platform, such as coffee tables and the supplier showcases, are open for an hour after the last session this afternoon, but then the show will be closing. So please make sure, if you've been to some of the presenting partners showcases and added content to your delegate bag, make sure you download that delegate bag before the end of the day. And also any contacts you've made on the platform, please download your contacts before the end of the day, as well as today is your last chance to log into the platform. Now, during this session, and indeed in all sessions at Tamebay Live, if you have any questions, just beneath the screen, you'll see a red box where you can submit questions. They'll come straight through to myself or my co-host today, Andrew, and we're going to put as many of those questions to our speakers as we can. I'm really grateful to the speakers. Every single speaker has agreed to take live questions. So anything you want to know or any help or advice, if you want to find out more about their companies, drop a question in and we'll ask them. And finally, all sessions are being recorded. So if you've missed a session, don't worry. Yes, you will be able to rewatch this session and all of the other sessions on Tamebay Live, and we'll get those on the Tamebay Live website as soon as we can. But now I'm delighted to introduce Sam from Ulsam. Now, Sam is a really experienced around Amazon. He actually worked within Amazon's marketplace team for 4 years. And whilst there, he was supporting hundreds of UK marketplace sellers across the EU. And he also founded and sold his own category-leading brand, Beachmore Books. So with a huge amount of Amazon experience, Sam, welcome to Tamebay Live.
Great to be here, Chris. Thanks very much for having me. I would just tell the virtual audience today, I'm one of, there are 2 co-founders of Ulsam. One of them was meant to be on this talk today, but he's actually with his wife in hospital who's having a baby. So it's happened very fast in the last sort of 2 hours. So yeah, a bit of a crazy morning, but great to be here.
Huge congratulations to him and his wife. Now, Sam, I want to kind of split today's session into 3 different sections. I want to find out a bit about you and the business that you founded and your previous experience and what you know about running an Amazon business. Then look at FBA business and the growth and health metrics that people should be measuring. And finally, I know you guys have raised investment, and I'd like to talk a little bit about investment, how people can raise finance for their own businesses. So getting straight in there, what is the Ulsam Group and why did you start the business?
Yeah, so a bit of background to us. So as I said earlier on, I've started Ulsam with my brother Ollie and myself, and we've got quite different but quite complementary backgrounds. So essentially, his background was in finance and M&A. He spent about sort of 7-8 years in the city doing M&A, not loving it, working crazy hours. My background's more e-commerce and sort of CPG brands. So I used to work for Amazon for a couple of years, supporting UK, European small businesses, really from sort of 5-figure a year to some of the largest in Europe, helping them sell cross-border and in the US. And really, we are our business. Essentially, what we do is we combine the functions of investments, of supply chain, finance, branding, creative, to basically pay life-changing amounts of money to small businesses in the UK who sell usually via Amazon or just generally on any e-commerce platform. We buy their business, we then internalize all the functions, and then we grow it. And we grow it through marketplace expansion, new product launches, and then really focusing on PPC and creative of existing selection to basically grow the business and really take it to new heights. It's been an amazing journey. I think one of the things people ask me, like, what's it like starting a business during a global pandemic with your brother? It's pretty crazy, but it's been really, really rewarding so far.
So tell us a bit more about your experience. I'd like to dig back. You founded your own business, and and then sold it. What was it like building your own online business, like many of the merchants and brands that are watching today?
Yeah, I think it's before going into this, what the space that we're doing now, and I'm sure some of the audience today will be very familiar with companies like ours. But I think I really wanted to put myself in their shoes. What is it like to actually scale an e-commerce business? And it's really hard. Like it's super hard. So, essentially, a bit of background. As I said, I used to work in the marketplace team. I spotted a niche in a category. I went to China, went to the various fairs, met with factories, sourced products, put all my savings into my first PO, and sat and waited nervously to see the sales come in. And look, eventually, I sold it in July of 2019, it taught me a couple of things. One, I guess where my shortcomings were as a founder and where I needed help. Two, the importance of having clean financials and clean books and working with a great accountant. And then three, just kind of appreciating the stress that Amazon itself can cause sellers. You could be doing nothing wrong and something can happen that totally derails your plans. And it's got nothing to do with you. And I think that really opened my eyes and helps, really engage with sellers on a quite different level, I think, than if I hadn't done it before.
Mm. So you acquire Amazon businesses now. So what type of businesses are you looking to acquire? What makes an ideal business for acquisition? And I guess along with that, kind of what type of person wants to sell their business? I mean, why don't they carry on running it?
Yeah, so a couple of questions there. So, what type of businesses do we acquire? Every company has a different investment mandate. I think ours is, I guess you could broadly split it into kind of what we look at, Amazon fundamentals and then financial fundamentals. So if we take the Amazon fundamentals first, we love brands that have quality reviews, right? They have the customers love their product. We don't acquire brands where the average star rating is like 3.5. We like to have see really well reviewed products. We like products really in any category, apart from consumer electronics. And the reason for that is just because there's a lot of R&D and work that goes into constantly improving the technology behind these brands. And so really for us, we love brands where there's a very low to no tech obsolescence risk. So the number one selling spatula is a great example. We love that. And then in terms of, we love brands that have IP protection. So the business owners have invested in, say, having a trademark on the marketplace. They're in brand registry, but they've also invested in IP across the EU, US, and the UK as well. So they've really invested behind protecting their brand from competition. In terms of execution, we don't mind if they perhaps haven't invested a huge amount in imagery and A+ content and PPC. That's okay because our team can do that. So that's not a requirement. On a financial side, we break it down to I guess we can come on to this a bit later on, but we like growing brands. We like brands that are seeing year-on-year growth. On average, from what we've seen, and we've seen now, over now 200 P&Ls, is around 20% year on year is a nice metric of just top line revenue growth. We like businesses with a healthy SDE margin, seller discretionary earnings, which is the kind of the industry term for essentially your net profit, and we'll come on a bit later on as to what I mean. But again, that's around 20%, like 20 to 30% is what we're seeing. And then, so those are kind of the key ones. And then more broadly, we love categories where there are, where the category is itself growing. And we're seeing, a nice focus in that category, be it, one example is pet care and pet accessories are seeing a really nice COVID tailwind as well. Those are kind of the key factors we look at. I think, why would a seller want to sell? Look, it really varies. But the best part of, one of the great things about my job is I get to sit down with entrepreneurs and understand the why behind their business and kind of where they're at in the journey. And, for some reasons, it's very personal. There's something going on in the family, and they need to basically sell the business. For others, it's, they want to buy a new house, or a speedboat, or whatever it may be. We've had everything, and so it really varies from seller to seller. The key point I want to get across is that there is no perfect time. Every time depends for where the person's at in their personal life, and it really varies, to be honest. The key thing, other thing I want to emphasize is, always look to sell your business when there's growth potential, when you haven't totally maxed it out. Because the common thing we hear is, oh, but there's so much more growth I can have. We love businesses where there's loads of growth to be had. So yeah.
And I guess during the pandemic, there's been a lot of life changes, and some people will have started a business and maybe not know what to do with it, in which case they should be speaking to you. But I'm guessing others, maybe through life changes, have wanted to emergency dispose of their business. So how many businesses have you actually acquired so far? How many FBA businesses do Allsam hold?
Yeah, so we don't disclose the exact amount, and neither do our competitors. But I can tell you, it's now over 12 companies that we've acquired, and we've now got a very smooth process of acquiring these businesses. And it's important to emphasize that, because it's a life-changing moment for a seller. Like, it's a really personal moment. This is a business they've poured everything into, blood, sweat, and tears, late nights. We appreciate it, and I think. It's a very stressful, well, shouldn't be with us, but it's a very personal experience. And so we're now, very comfortable going through the process and explaining to sellers how, a business sale works. And often it's their first time they've sold a business. So it needs to be very, very clearly explained, from the legals to, the financials. So yeah.
Now, I totally get that. As obviously as one of the founders of Tamebay, I know exactly how much blood, sweat, and tears goes into running a business.
Yeah.
So I want to get into a bit more of the nitty gritty of FBA businesses. I'd like to start off with how you value a business, but more importantly, I want to look at what sort of health metrics merchants should look at in their own business, because I'm guessing if you're looking at a business and thinking, hey, this is a great business, the metrics are good, you've already mentioned sort of reviews being sort of 4-star or above. But if a business is attractive for you to acquire, it's probably attractive for them to still run as well, or could be, depending on circumstances. So what health metrics are sort of vital for these businesses?
Yeah. So if we start with, as you said, important health metrics to review and be aware of. I'm sure your community is all too aware of, the seller central metrics that are really important to be on top of. ODR, so the order defect rate, we monitor very, very closely. Things like the returns rates are very interesting to us, and we kind of have a fairly sound understanding of the return rates and where they vary from category to category, and what's the norm. I think another interesting metric we look at now is the IPI index score. And again, this is very, very interesting as we come into things like Prime Day, where Amazon suddenly sends an email, explaining.
And that's the inventory performance.
Yeah, exactly. So the inventory performance index score, again, just another, I guess, complicating factor in running an FBA brand, having to deal with this new metric. But we follow that very, very closely as well, and see whether or not this can be improved.
And that's actually really important, because Amazon have just announced limits to restock levels in the run up to Prime Day. But also, you should be looking at IPI scores now, because they're going to be measuring it twice before July, and that's going to determine how much inventory you can put into FBA in Q3 and probably running into Q4. So these are really, really key metrics that people should be keeping an eye on.
Absolutely. And I think just drilling deeper into that, with our brands, we've seen this IPI score. So from brands that we've acquired, that IPI score is impacted by perhaps slower moving SKUs versus faster moving ones. And we now can't get our faster moving SKUs in because the slow ones they're essentially impacting us. So, as you said, Chris, this is impacting, we have to think about this very closely as we head into Prime Day and obviously thereafter. So that's another very much a complicating factor for us, and then a metric that we look at really closely when we're doing our due diligence on a brand. I think the other things to look at are things like, the product review to ratings. We're very, if there's something, if you ask me what's a turn off or what's a red flag when we're looking at an acquisition, it's review tactics and gaining reviews. We have various ways now of really digging into what is a normal review to rating ratio and understanding like, what does normal look like. We sadly can't acquire businesses where black hat or even some grey hat tactics have been used to essentially acquire reviews, because it's just not a sustainable long-term strategy for us at all. In terms of just
actually on that, it's worth pointing out that Amazon have very, very recently shut down a lot of Chinese selling accounts, which we suspect was probably because of review manipulation. But these were massive, massive names, private labels that have become almost household names on Amazon, and representing something like $1 billion of turnover on Amazon. And Amazon just shut the accounts down, and we suspect it was because of review manipulation. Correct. So it's a game that's just not worth playing.
It's not worth playing. And I can tell you from a fact, I used to manage one of those accounts, one of the top headline ones that was mentioned. It is huge. And I can tell you that like that type of action, I think, should send a signal to hopefully to all sellers in the community. That kind of tactic isn't really, as I said, a long-term strategy. Even if your competitors are using it, don't use it. It's not a long-term strategy. But it's in terms of just valuation drivers for the audience, just to understand like what drives the valuation of my business. I've outlined here a couple of key valuation drivers that we look at in no particular order. Basically, reviews, as I said, are really important. We like category leading. We don't like ones with, as I said, sort of 3.5 stars average rating. We love businesses where the owner is fairly hands-off, and that's reflected in essentially the time they spend per week on average. Now, obviously, that will fluctuate depending on a good week and a bad week, but in general, we see around 10 hours a week as being the norm of managing their business. We like businesses that are, as I said, seeing really strong year-on-year growth, have a healthy margin, as I mentioned, and then the age is an important one. From having reviewed many Amazon brands before, we see that, on average, the business should be gaining to a certain revenue point within 1.5 to 3 years. That's where we're looking at. That's the sweet spot. If it hasn't reached that revenue mark in 3 years, it probably isn't growing at the rate that we need it to. And that's just from experience that we've seen. And then on the right-hand side is kind of, well, what does all these factors actually mean? What it means is that they influence your multiple. In other words, when I can come on to this on the next slide, but how we actually value your business and the cash offer we put to you is dependent on this number on the right-hand side here, the SDE multiple. And this ranges from essentially 1.5 times to around 3.5 times your SDE profits.
There's something jumping out here at me, and that's running a business for less than 10 hours a week. But I think there's two factors here that I'd like to dig into. I'm guessing many, many merchants are thinking, how on earth can you do it in less than 10 hours a week? But these are FBA businesses. So Amazon are doing all of the storing, the picking, the packing, the print and delivery slips, the orders, the customer service and returns and everything. So really, your business should be, if you're an FBA business, should be pretty much just sourcing stock and getting the mechanics of getting it into FBA, and then doing everything like optimization, running sponsored product, sponsored brand, monitoring reviews and everything. So there's a lot of the hard work cut out. But is this sort of 10 hours a week, is this sort of a one product business or a small group of product businesses? Or could you run an FBA business for sort of 100 products in less than 10 hours a week?
Yeah, I mean, a great question. So I think the other point I'd love to add, and I think we'll touch upon it later on, is around just the inventory size. Our preference is for inventories where the seller has, basically, 2 or 3 hero SKUs is what we tend to see, and then probably a maximum of about 20 to 30 SKUs. What we've seen sometimes is sellers who have, hundreds of SKUs. Leads them to spend over 30, 40, 50 hours a week running the business. And what we tend to see is sellers, it's called like diversification, when they add more SKUs. It's very hard to launch products on the marketplace. And my advice to business owners is, yes, the 80-20 rule I think strongly applies to in e-commerce. I can't speak on behalf of some channels, but I know Amazon. Really focus on executing on your top performing selection. Hone that down. Make sure you've got a clear strategy for launching those and into new markets, and really executing upon the content and the listings and things like this. And grow those and really focus on those. Avoid trying to launch lots and lots and lots of selection, because it ties up a lot of working capital, which is a big problem for me. And it means you kind of have your focus is really spread across multiple products, and it makes it very hard to actually succeed and really grow your business. So, I've seen brands on the US site who are doing 15, 20 million off 4 SKUs. And it's very possible. It's very possible.
So could we dig a bit more into how you value a business? Because I think it's interesting for everyone to know what could my business be worth?
Yeah, definitely. So how do we value a business? So basically how it works is, if I just kind of walk through the process, we have a 30-minute introductory call where we look at we chat to you as the seller. You get to know us, importantly, and you get to ask us questions, and we get to know you. We then basically have a period of sort of initial due diligence, which is about 48 hours, and during that period we look at these factors on the screen here, so all the valuation drivers. Following that period, we then essentially will come back to you with what's called an LOI, or a letter of intent. And this is a non-binding legal letter that outlines the valuation that we're going to essentially present to you. Now, how do we come up with this valuation? Well, basically, it's and I'm going to run through top to bottom how this actually works. But we take your net profit from the last 12 months, and we apply the multiple that I showed you on the previous screen. So we take your seller discretionary earnings, your SDE, and this is essentially your top line revenue. You take away your COGS and essentially your operating costs, plus a few what we call add back, so kind of one-off expenses. So it might be a photo shoot you did, or kind of anything one-off. And we basically take your SDE and we times that by the multiple that we've applied. And I've just outlined an example there. So say you did £100,000 in essentially SDE profit. We think your business is growing. We think it's got good review structure. We think it's got healthy margins. We provided a 3.1 times multiple. This £310,000 is what we would say your business is worth.
And a very interesting note at the bottom of your slide there, the inventory is not included in that valuation and paid out separately. So if I've got sort of £300,000 worth of inventory, I'm going to get paid for that as well.
Correct. Yeah.
So that's a really interesting way of valuing a business. Now, I don't quite know how to phrase this. How do you know you're not buying a pup that someone's run their business, that they've got to a level, but they're probably working harder and harder to keep at that level? And equally, if I'm running an FBA business, how do I avoid myself getting into that situation where I'm running harder and harder and harder just to make the same profit and stand still? And maybe there's more competition and the product was making a ton of margin, the margin's being eroded. Maybe there's more competition for other products, or it could be anything, but you know what it's like when you're running a business, and it's very easy to get bogged down into just doing and finding it harder and harder to make a living.
Yeah. So what I tend to say is, and there are a couple of, I guess, if we actually just specifically deep dive into what could be an example of what you just mentioned. So one example is, say, PPC spend. You're just spending more and more and more and more to basically try and acquire customers. And when you find yourself essentially in this sort of what we call like a death spiral of just unprofitable campaigns, it's time to think about, what can I do to actually drive traffic other than Amazon PPC, which, by the way, I think is getting more and more expensive, and I don't think it's a sustainable way to promote your business. So then there are things we look at, which is like, affiliate partnerships. Amazon's got an amazing affiliate network of websites, bloggers, influencers that you can leverage to feature your product. 1. 2, start looking at your own channel and really start focusing on building out that D2C presence. I think is a really important one. 3, it's around making your product, and I love this strategy. It's essentially making your product different from the competition. And when I say different, I mean offer something that the competition is not. So maybe chuck in some ancillary products that your competition is not doing. Maybe add really nice gift packaging and gift and make it a more giftable experience. We've done it with some brands where, simply by making the product in a nice, adding nice packaging, whether it be, a box, a tissue wrapper, whatever it may be, you can increase the price of the product by 20-30%, which means you're automatically now in a different price bracket to your competition and you're more of a giftable product. And on Amazon, there is a huge customer base who are looking to buy gifts, huge. So I think that's definitely one way. I think other ways is, I think sellers, and we've spoken with sellers where they end up in a spiral of just reducing their price. They think that just lowering the price is the only way to essentially remain competitive. And what you end up doing is, basically Amazon is, well, customers come to Amazon for the cheapest, not always, but that's what sellers think. But actually don't do that. Think about ways that you can justify a higher price. How can you basically become the more premium alternative in your category? And I think what I found when I was running Beachmore Books is it's very scary upping your price. You have a fixed price for a while and you think, oh, if I increase this price, I'm going to plummet the sales rank. I'll lose sales. We underestimate the price elasticity of a product. There's actually quite an interesting band that you can move to. And with Beachmore Books, I increased the price by 30% and sales increased. Customers saw our product as a giftable alternative, and we actually found that by increasing the price, we actually increased our sales, individual unit sales, which was really interesting. And we only did that by accident because we were running out of stock. So we thought, well, this is a good opportunity to increase the price and slow down sales. So tinker, don't be scared about increasing your pricing. It's very interesting just to give it a go.
So there is always that danger that I've got to be cheapest, that race to the bottom. But I find it really interesting, your thought of adding value, making it giftable, maybe upping the packaging a little bit to set it aside or adding in additionals. Now, I'm really interested in your top tips for people wanting to grow their own businesses. So you've already talked about you're interested in businesses that can grow and then you can add value and grow them even more. So what do you do that merchants running FBA businesses can apply to their own business and take advantage of your learnings?
Yeah, definitely. So I think it's about, some of the things we're very fortunate to have at Allsam are specialist departments who can essentially really focus on the various aspects of an e-commerce business. And the thing that I always say to sellers when I meet them is just how incredible entrepreneurs they are, because they wear so many hats: finance, supply chain, advertising, branding, everything. And they're covering all bases, and it's really impressive. But it's difficult, especially if your specialism isn't in one of those departments. So, things that I would advise sellers to look at, that we have a department that's all they do, is demand planning and forecasting. A problem I found was that I was running out of stock because I wasn't accurately doing accurate forecasting, mainly because one, I've never had supply chain experience properly. Two, I don't have software that did it properly. So I was kind of on an Excel, slightly guessing, to be honest. I was thinking, I think my sales could increase 30% this year. But it just meant that sometimes at Q4, I lost huge amounts of sales because I was out of stock. So I think, one example, Chris, would be demand planning. Really sit down and look at your inventory and really think carefully about where my sales are going to go this year, and think about all the inputs. There's COVID, there's issues around importing, there's a shift to online. There are various factors you're thinking about that should indicate how much you should order. The second thing is around working capital. There are amazing products out there now that support sellers with working capital requirements. And so again, an issue that we hear often is, I don't have enough money to buy stock, or all my money is tied up in stock at the moment. I think I would encourage sellers to look at working capital solutions out there. And there are quite a few that I'd recommend that are amazing and pretty relatively cheap, but will allow you to really exponentially grow and launch into markets where you couldn't have done before, is another point. I think another factor I would tell sellers, and this again is a really important point about if you do want to sell your business, and a point that acquirers like myself and others really value, is the complexity of your inventory. If you have hundreds of SKUs, try and do a SKU rationalization project where you go down and look at the SKUs and see which ones could you cull.
Mm.
It's a tough process because you love all the products you launched. You poured so much time in, and it's quite brutal to see them crossed off. But really invest in thinking about which SKUs you actually can take off, because the leaner, more efficient inventory you have, the more attractive that is to an acquirer, because it's easier to take ownership of. It's more straightforward.
Yeah, and I have to admit, from having run my own business, there were products which used to fly off the shelves, but then the demand for them simply dropped away and it was never going to come back. To give an example, I used to sell laptop accessories. In the day that laptops came and didn't even have a modem built in, so you had to buy a modem card. They didn't have an Ethernet port, you had to buy an Ethernet card. And then when Wi-Fi came along, you had to buy a Wi-Fi card. Now, tell me, who's going to buy a Wi-Fi card to put in a laptop nowadays? Can you even buy a laptop that hasn't got Wi-Fi enabled? So there were products that were really, really good earners for me. And I'm talking kind of like profit in the multiples of 20 times. So if I paid £1, I was selling it for £20. Massive, massive profit. But those products just don't sell anymore. And if I've still got them hanging around, there's nothing I can do to bring back demand. It's time to ditch them.
But that's the point I said earlier, Chris, when we spoke about the categories that we like to invest in, like technology and consumer electronics. That's a constantly innovating industry, and as a result, you have to constantly be investing and reinvesting in up to date tech, which for us is not attractive to us, because as you said just now, that's exactly why.
So I want to turn a little bit more to how someone can look and plan for a future for their FBA business. And by that, I mean, how do I decide whether I've got the expertise to carry on growing my business and the desire to take it to the next level, or whether perhaps I've got to a level that I've got products, they're performing, but I may be one-man band. I just don't have the reach to take on the next product and the next product, because I'm doing all I can to hold it. But you know what? I've got a great income, and if I can maintain that income, I'm happy. Or maybe it's a time to say, actually, maybe it's time to sell my business. Would someone actually buy it? How do you decide? Should I go for growth? Should I maintain where I am? Should I liquidate the business?
So this is kind of this neatly comes on to kind of this point here, which is, first of all, we love speaking with business owners at all stages of their journey, whether it's they're just thinking about it, and we'd love to explain the process in more detail and what you should do. And we love speaking with sellers who are actually like, right, you know what, I'm done. I'm done with the working, the weekends, the holidays. I just want out. So if we take one example of a business owner who thinks, right, you know what, I've taken the business to as far as I think I can get it to, but I see big upside potential with the right owner who can take it to the next stage. Now, Can
I just stop you there? When you say big upside potential, what are we talking about there? Are we talking about adding in more products, or are we talking about I built a great UK business, but with Brexit and everything, I haven't even touched Europe and the rest of the world? Or what is that big upside that I should be seeing that I'm thinking maybe I can't cope with on my own?
Yeah, totally. So you just said it just then. So it might be that you've taken the business to as far as you can with the capital that you have in one particular market, and you know that with more working capital and a team, say specialists in supply chain who are comfortable with importing into Europe and dealing with all that headache, you think there's actually a huge amount of growth in Europe, but you can't take it there by yourself. This is where I think we love to speak, because how we structure our deals is, and just so the audience is aware, is you'll never be presented with a 100% cash upfront offer. The reason is because as an acquirer, we need to have, a couple of things. We need to have the business owner incentivized to, see the upside with us. And the second thing is, obviously, there needs to be some downside protection for us in case the business, for some reason, just completely bombs. Not that it would, we hope, but you never know. So how that looks in practice is, we tend to offer 3/5 to 4/5 cash upfront, straight in the bank account. This is the cash upfront offer, but there's always an earn out component, and this can vary. That number varies from deal to deal depending on how we structure it. But essentially, it's saying, look, over the next, on the slide there, it's 3 to 6 months, but we could say, for the next 2 years, we have such exciting plans to do all the heavy lifting for you, but we're going to take it to the US. We're going to take it, boost its own channels, social, focus on Europe. and we'd love you to join us on that journey. We want to share that journey with you, and that's when we essentially structured a deal like that. On the other hand, then,
if I've sold a business to you, what should I expect during that earn-out period? Am I still going to be working sort of 5 days a week, 40 hours a week, or do I do nothing, or is it somewhere in between?
Yeah, no, good question. So, in terms of how the business owner's time looks like, we have what's called once the money hits the bank account, we have a 3-month what we call migration phase, where essentially we're just making sure we're transferring ownership of the bank accounts, the website, all the processes they have in place. Beyond that, we have an amazing operations team here in Allsam. We have a 15 years combined experience of ex-Amazon Marketplace and other consumer goods companies, and we run the business with us. Just we run it in-house. The business owner can spend as little or as long as they'd like. If they want to completely step back and have 1 email a month, that's fine with us. But they should know that their brand's in great hands, and our team is here looking after it and growing it, and hopefully sharing, definitely hitting that upside in the earn-out.
So that's really, really interesting, and I'm imagining that with the changes there's been over the last year or so, with pandemic, and let's not forget the impacts of Brexit, that there may be a lot of people that are looking at their business thinking, it's just getting beyond me. I'm just being hit with one thing after another. But if you're acquiring these businesses, I'd like to turn a little bit to funding, and find out what your experience of getting funding was like. Because I'm guessing if you're paying substantial sums for the business, that you've attracted funding for Allsam. So what was the experience like? And what would you suggest for retailers who are looking to get funded? And I don't mean that are just looking for a short-term working capital loan, but are actually looking for investment into their retail operations.
Yeah. So look, I mean, we are backed by some incredible investors, tens of millions of pounds behind us. And to be honest, it was a really interesting, eye-opening experience explaining to investors about Amazon and about e-commerce, about eBay. It was a bit of a black hole for them. They didn't know what FBA was. They didn't know, all the pitfalls that everyone, I'm sure, on this call do know. That has now changed a lot in COVID. As you said, Chris, COVID has accelerated interest in the space, interest in Amazon, eBay, Shopify. There's been a huge amount of investment pouring into the space, and with that understanding and ancillary services coming in to help brands. So look, for us, it was an eye-opening experience, not easy, but we're very lucky with the investors we do have, and they are awesome and incredibly supportive and love what we're doing. I think, for business owners on this call, my hunch would be, and tell me if I'm wrong in the chat if you think, Sam, that's completely wrong, but these are your babies. You know how you want to run them. And probably, unless you want to exit completely, you don't really want someone like an investor telling you what to do, would be my hunch, right? Unless you have very, very, very big growth ambitions to scale. So when we talk about getting investment for your e-commerce brand, my advice really is there's no need to offer equity to anyone out of your business, because, as I said to you earlier on, what we tend to hear is that e-commerce business owners need money for stock, for advertising, for growing their business. And so, right now there are some incredible companies out there that offer this. I'm happy to share these if sellers would like to ask us and contact us. But yeah, they do offer fantastic working capital facilities because, as I said, my hunch would be business owners don't want to have a boss unless they want to sell entirely. Would be my guess, but maybe I'm wrong.
No, that makes sense. So if you are your own boss, it's very, very hard to give that up. And just to remind people, if you do have any questions for Sam, please do drop them in the chat box. But I want to move in on Sam, and so you're not the only person in this game at the moment. There's a lot of aggregators appearing. If I'm considering selling my business, why should I pick Allsam above any of the others?
Yeah, so I think it's a great question, and there are a couple of reasons why. The first one is as a seller, as a business owner, money is one thing, being well capitalized, and I'm sure some of the community have seen these huge headline numbers come out. But what I think sellers should really look at is the operational team behind the company. Because as I'm showing you on your screen here, there is a component of on the deal across all, by the way, all acquirers will structure it similar to this, of an earnout component. And as a seller, I want reassurance that actually the team who are buying my company have the understanding and execution potential to actually make me hit my earnout. And if I don't see that, or I don't feel that could be the case, then just think very carefully who you're exiting to, because money is just one thing. It's about having the skills. And also, as I said, I'm very thankful, I'm very proud of the team we've built. And it really comes down to just operational expertise. We have our supply chain team is expertise in 3PL logistics, demand planning, cross-border shipping. Our head of logistics, a guy called Damien Conroy, he spent 20 years in logistics, and he helped build up a company called eBuyer, a huge Amazon seller who
Yep.
he helped build, this is now a long time ago, he tells me, but he helped really build out their operational logistical foundation years ago. In our branding team, we have a creative team who've worked at some incredible CPG companies, designing packaging, social. And then in our operations team, I'm proud to say, we have more ex-Amazon marketplace expertise and who are Amazon FBA sellers themselves, which is so important, who are running these brands. That's quite rare. You can come from running other online businesses, but have you seen a Seller Central before? Ask that question to an acquirer, because sometimes they might say no. They've never seen one.
I have to say, you're right that it's more about just the money, although the money's going to be nice because it's going to be life-changing. But I think you've got to remember that people have literally put blood, sweat and tears into building these businesses. And it's their brand, it's their baby. I know they're going to be looking for someone that is not just going to give it the care and attention that they've given it, but to see that grow to the next level, even though after the acquisition and earnout, they're no longer involved in the business. They're still, I started that business. That was down to me.
Totally. What we love is to, we're so proud when sellers come to us and say, wow, like you've totally changed my packaging. You've taken it to this market. I saw it on this other e-commerce channel. That's like so cool, because that's our team working as hard, and trying to take that brand to new heights. And that's what's so rewarding about doing what we're doing.
So I know you've touched on it a bit, but tell me a little bit more about what the acquisition process looks like. I'm actually thinking, there are going to be, and this is really unfortunate, but there are going to be some people out there whose lives have been devastated by COVID, and that they may be left running a business that previously they could spend 40 hours a week on, and now they're lucky if they can spend a couple of hours, or perhaps even that a partner used to run, they don't know what to do with. There'll be others who have, through circumstances, and maybe enjoyed having more time at home, and that they're more of my age than your age, and they're thinking maybe I should be looking at early retirement. Do I really want to go back to the grindstone of running the business every day? So what does the acquisition process look like, and what's there to welcome them and ease the process?
Yeah. We actually just acquired a business from a retired policeman. It was an amazing experience. So let me just show you. This slide is quite dense, so please, as a viewer, don't read this. This is a PDF saved on the online what's Tim Chris was called Totem.
On the Tamebay Live platform.
On the Tamebay Live platform, yeah.
Allsam presenter showcase, then you'll be able to download it and read it at leisure.
You can, yeah. So I won't read out every single step, but in simple, we have a 6x6 process. It's 6 steps in 6 weeks. That's how to look at it. We are acutely aware that as a business owner, you're really busy, super busy. This is your baby. It could be very stressful because, as I said, it's your first business. You love it and you want it to go as well as possible. So, we're acutely aware of this. In general, though, as I said, you have a 30-minute introductory call. We get to know you, you get to know us. We're a nice team, I hope. You like that first call. Then after that, if it goes well and you like, how the conversation went, we'll do this early due diligence. It's 48 hours. We ask to see essentially a P&L statement, or we plug in our software to your seller, Seller Central, or whatever e-commerce dashboard you use. Following that, if everything looks good and we'd like to proceed, we present with a letter of intent. It's a non-binding letter, non-legally binding letter, which just outlines the terms of the deal. After that, we then basically we issue in that letter, it outlines the cash payment details, e.g. how much we're going to pay up front, and then what's in the earnout and how long it's going to take. Just lays out the deal in the document. And then we have our structured due diligence process, where basically over the course of 2 to 3 weeks, we'll basically deep dive into your business. We use a fantastic due diligence service provider who do this incredibly well. It's really structured. They don't ask for the same materials over and over. Quite simply, they set up a Dropbox and you just drag and drop all the information. Things like invoices, things like supplier agreements, things like IP and trademark, but they'll guide you through that process really clearly. Following the due diligence process, we'll sign what's called an asset purchase agreement or an APA, which outlines the deal offer again to you. We'll both sign, and literally we then transfer the money into your bank account.
That's the asset migration of payment, which is the ultimate aim of it all. So we're running out of time fast, but there is one question I wanted to get in.
Yeah.
And that is, we've talked about people with their FBA businesses and their health and the expertise you've got, but you're doing acquisitions all the time. But what's your own exit strategy? What are you planning for Olsam for the future? Are you going to run it forever, or do you have an exit strategy?
It's a great question. We have big ambitions to become Europe's next generation consumer goods company. I think Olsam, I hope we're building more than, we don't just acquire brands, we're building a technology platform to grow brands. And, we'd like to one day IPO. We have a timeline we want to do that. We'd like to expand to Europe, to other channels. We've got big ambitions. We're not selling anytime soon, Chris. We've got a very, very exciting long-term goal.
Fantastic. I'm sorry, Sam. This has been a fantastic
conversation. Thank you very much.
But we are up against time.
Yes.
I would just like to remind everyone, if you want to find out more, you can contact Sam. Either just Google Olsam and you'll find him, or for the rest of today, you can go to the presenting partners showcases, and you can actually, if you're in a hurry, just click the button to sign the guest book, and Olsam will get in touch with you. But also, if you want to download that slide, it's in the download PDFs, which does remind me, incidentally, today is the last day of Tamebay Live, so make sure that if you've added downloads to your delegate bag, that you download your delegate bag before the end of the day, and also make sure that you download any contacts you've added before the end of the day, because the platform will be open for an hour after the last presentation this afternoon, but then it will be closed. And as a reminder, we will be making all presentations, we're recording them all, we'll make them all available after the event. So Sam, I'd like to thank you for your time today. If anyone would like to get in touch with you, I'm sure they'll manage to find you, but the website address is Olsam, Olsam. It's very, very easy to find on Google. So come back this afternoon. We've got a really exciting session first thing this afternoon. It will be on our other stream, the retailers and brand stream, but it's going to be about Google shopping campaigns. So come back after lunch for that. We're then going to be looking at fulfillment, and we're going to end the day looking at a post-pandemic exit strategy. So rather topical to end the day on the same thing we've just been talking about, Sam. It's a pandemic exit strategy instead of a business exit strategy to end the conference with.
Awesome.